Welcome, welcome. Godric here, your stock market mentor. Friday night, November 15th, 2024. Going to talk about some stock market stocks tonight. Appreciate you guys. Give me a follow. I'll follow everybody back after the live. If you sub, it's only $5 a month. I can answer all your questions. I'll talk to all my subs first. You subs know what I'm talking about. I got your back. Walk you through these trades, teach you how to do these trades. And if we do it right, we're going to pay all our bills every month and retire into the stock market. That's what I specialize in. You guys want to learn? Get your journals. Get your journals out. Acid-free paper. Come on now. Got your Stedler pencil. I didn't know I was going up against the Tyson fight tonight. Man, sorry I'm late. Thanks for hanging out. 8 rounds. From what I saw, it was underwhelming. Jake Paul took out Tyson in 8 rounds. I guess it wasn't a knockout, was it? Appreciate you guys. I labeled this live quantum computers. Back in the day when I was learning about stocks, one of my first lessons was the burning match theory. The burning match theory goes something like this. With a stock or any bright business idea, it's like a burning match. The match light is on fire and then it goes out. That's the lesson. And a lot of times that happens with stocks. They're hot. The stock is on fire. It goes up. It gets a lot of hype. The stock price goes crazy, and guess what? It cannot maintain forever. So it generally will go out. It'll cool off. This is kind of what we experience when we look at earnings. Before the earnings, whatever hot stock it is, the price starts building up. People are excited. They're anxious. And then the earnings come out, and, we're all still here. It's no miracle, and then it kind of cools off. So keep in mind the burning match. If you learn that when stocks are exuberant, it can almost never maintain. So it's going to go up and come down. Kind of like Bitcoin. If you look at Bitcoin, it's hot for like 1 week out of the year, and then it's kind of cold the rest of the year, And unless you're Bitcoin mining. And that's why I'm teaching you how to take all that risk out of it. I'm teaching you how to take all the hype out of stocks. While you can participate in the hype, I won't get mad at you. Learn to get these dividends every quarter. Some stocks pay dividend every month. Learn how to get these cover calls every month. Some of you guys are getting the cover calls every week. You know how to do that. Appreciate you guys. Give me some likes. Hit those likes. Get the likes 10,000, guys. Appreciate you. Help me get some people in here. Talk about some stock market stocks tonight. So if we can get these cover calls every week, every month, every 6 months, every year, dividends consistently, if we're in the best stocks, right? While we don't mind that hype, we're not relying on it. We're not doing like a Hail Mary pass. We're not gambling. And that's the thing. If your foundation is based on accurate technical analysis and income every month, generating income, not relying on earnings to be good, not relying on the hype to go more hype, then you're taking the gambling out and you're turning it into like a financial science, which is what I'm going to show you guys. Talk about that tonight. Welcome. $60 a week premium. Tyrese, $60 a week premium. You got to start somewhere. Why not? I won't be mad at you. $60 is $60. All right, guys. Let's put a new entry in our journal, November 15th. Tonight, I want to talk about a little bit about quantum computers. you're into that. That's the new hype. That's why I brought that whole story up. Sorry, that was too much. We were talking about like artificial intelligence years ago, and now everybody's here. NVDA, Google, Microsoft, with these AI companies. So this is already happening. The robots are already here. Basically, we saw Elon Musk's robots. And they're already going to be doing these. I don't know what you call it. Sexual robots, like girlfriends, basically. I think the Japanese dudes did it first. Like, this is already happening right now. So it's almost like people are looking for that new thing, that new magic. I think it might be, if you look at it, the new thing might be quantum computers. So I have one stock for you. We talked about, actually, when you guys gave it to me on this live a few weeks ago. Log in here. The stock was IONQ. Symbol IONQ. It's been going crazy. It's hype. It was up like $3 today. See if I can find it here for you guys. Here's some stocks that I'm looking at if you guys want to take a picture. The Dow Jones was off 300 today at 43,444. No big deal. We're near the all-time highs. I don't know why Amgen was down. You can look that up. Bitcoin, 91,000 plus 3,000 today. Bitcoin's hype right now. Trump's going to make a government investment in Bitcoin. Domino's Pizza. Domino's Pizza might be shooting up. Berkshire Hathaway has just added Domino's Pizza to its portfolio, DPZ. Now, if you guys are doing this research, he did that in September, but the big news came out today or yesterday, so give it some time. It'll probably climb to 500. DPZ, check it out. Has a great chart. The Qs were down today. Things are cooling off today, but look at these. Look at the stocks who bucked the trend. MO, dividend stock is up. Meta was down. Zuckerberg is Meta is no Microsoft. Not in performance. Just gotta say. NVDA was down. Realty company O is a dividend stock. PM, dividend stock, up. So dividends were up today. Roku is down. Gold's been creeping up. Here's Charles Schwab and Tesla. Tesla was up. Tesla bucked the trend today, up 9 points, 954. I got two more for you. We might have a bottom for Trump stocks, DJT. It's been down and now it's up today. And Sherwin-Williams was down. Here it is. IONQ Incorporated, 29.14 plus 298. Write that down, okay? Let me pull it up for you here. The burning match, right? IONQ. Now, there's other stocks that do quantum computing, but IONQ is probably the main game as far as being alone, they only do that. Okay, IONQ, New York Stock Exchange. IONQ engages in the development and general purpose quantum computing system in the United States. It sells access to quantum computers of various qubit capacities. The company makes access to its quantum computers through cloud platforms such as Amazon Web Services, AWS, Amazon Bracket, Microsoft Azure Quantum, and Google's Cloud Marketplace. So these other companies that run quantum computers, Google, Amazon, Microsoft, also IBM, write that down, IBM is doing quantum computing. But this one is on its own, just doing that. So like For example, it could be a takeover target. It could be a buyout target for another bigger company to buy it out. And if it's trading for $30 now, right, this stock can easily double or triple. It could be $60, could be $90, let's say, within the next year or two. And it could have a nice tender offer if somebody wants to buy it out, like Amazon or Microsoft would probably pay billions to buy it out. The market cap right now I'm showing is only $6 billion. So it's tiny, it's a baby. It's showing SMCI as a competitor. I don't know if they do. I guess they are doing some quantum computing. Supermicrocomputer. It was having problems. They were going to get delisted from the NASDAQ down to $18 a share. But quantum computing is basically so new that it's not even really in effect yet. They're just kind of like starting it. And construction of specialized quantum computing hardware systems, maintenance and support services, and consulting services related to co-developing algorithms on quantum computing systems. The company was incorporated in 2015, and its headquarters in College Park, Maryland. So about this stock, I wanted to say that we want to take the hype out of it, right? So yes, it could go to 60 or 90, but we don't want to rely on that. We want to just be able to like write cover calls on it. And here is, let's see, here's one thing I did earlier this week, or maybe earlier today. If you look at this here is my sloppy writing, sorry, but it's showing December, which is 35 days? Let's take a look. 35 days out. You guys know how to do options? I'm going to show you. Buy 100 shares here. IONQ at 29, so $2,900. Okay, that's your investment, right? Go out to December 20th, which is 34 days. Okay. Write the cover call. In this case, I circled the 30 and 35. 30 and 35. The 30 was paying $410. Now it's showing $415. And then the 35 is paying $267. Now it's showing $261. Same difference. But I get 14% return on the 30 cover call and 9.2% return on the 35, which is to say that if you just did 10 cover calls, right, a year, you can get like 100 or 140% return. I'm taking the risk out of it for you guys. I'm showing you the return on these cover calls. The risk is there still because what? Because the stock can come down, right? But being that the stock is really hot and IONQ is the main game right now, I don't think it's going to go down that much. It will retrace, but it won't retrace that much. And yes, the share price will be all over the place, but if you're getting 14%, let's say you get 10%. Let's just do 10%, right? Find a 10% cover call. If the stock is 30 and you're getting $3 back, for example, I do like to allow for some share growth. I always allow for some share growth. So this is, in this case, it's 29. You can write to 30. And we're doing 410. Let's just double check the math on that, okay? Get your calculators out. Do the math with me. Okay, so 410, which is the premium. It's showing 415 right now, but I'm going to do 410. Divided by your cost of $29, $29.01, equals 14.13% return. 14.13% return on the cover call for agreeing to sell the shares higher for 30 in December, 3 or 4 days out. And that's the basic cover call trade. You can do this trade every month. Just own 100 shares, buy 100 shares, agree to sell it for 30, which is higher. So you get 1 point on the share growth. You get 4 points, 410 on the premium. And we divide those numbers, you get 14% return. What I would do, because I want to give these golden nuggets, I would do 2 contracts. I would do one under 30 and one under 35, because it's going up so crazy right now. So one under 30, cover call, which gives you 410. Then one under 35, which gives you 267. And what we do, we'll add those together, we'll divide by 2. Give you the best of both worlds. 2.67, do the math with me, plus 4.10 equals 6.77 premium per share times 100. That'll be $677 for 200 shares. And then divide that by 2. You're gonna get 3385. Rather, I gotta get that 0.5, half a cent there, and divide it by a share price of 29.01. So 3.85 average premium, average from 2 cover calls, divided by the share price of 29.01, which is your investment. Buy it here at the market. 11.66% return. 11.66% return per month. That's let's just do 10 cover calls a year. That's 111% return for the year. And will this stock maintain for a year? Probably. It can be anywhere between, let's say, 20 to 30 to 40 to 50. But keep doing the cover calls every month. You're going to get that premium, which is a lot of it's high, a lot of it's a burning match, But that's how you take advantage of it. You're getting paid that amount. You don't have to buy a call and worry if your call's going to go up or your stock's going to go up. You're going to get paid that cover call money in your pocket every month. You use that money to buy more shares, use that money to pay your bills. In this case, if you have 2,900, buy 100 shares, you're getting roughly $338. And that's your business. From that $3,000 investment, you're getting $338. That's how we get 11%, 11.66% return. And you can do this every month. So if you're willing to take the risk that a stock can kind of go up and down, then buy the shares, do the cover call, and see where you go. See where we are in 3 months, in 6 months, in a year. And then, furthermore, I'm showing you some more pictures here. Furthermore, if you there's another trading style which is where you get a free trade, right? Because it pays so much. If you look here, I have the option chain. You guys know the puts on the right side, calls on the left side. We're just doing the calls right now, okay? And if you look here, this is the different option chains, and I checked mark December. That's 34 days. That's the first trade I want to show you. I also checked mark January, which is 60 days out, which is 1 more month. And I also checked mark on the bottom here. You can see it, 2027, going all the way out. How many days is that? I can't see at the bottom. All 790 days, right? So you could do a 790-day trade or a 790-day cover call. Buy the shares here and go out maximum January 2027, and look what you get. Okay, let's check it out. This is the January 2027 cover call option chain. Check it out. It's paying $14 for the 30, okay? Which is to say, you're getting like half your money back immediately. So if you do $14 divided by your share price of 29.01, you see 14 by 14.25? That's the premium when you go all the way out, max it out. 48% return. So what's happening is you're gonna, if you go all the way out 790 days, you can actually bring back $1,400 for a $2,900 investment on IONQ. 790 days, and you're getting 48% return. So what's happening here is you're getting paid half of your value up front. It's like saying, I want to invest $2,900, and I want to get back $1,400 in my pocket. And all you have to do is hold that stock for 2 years. Okay, it's actually 790 days. All right, now, could that stock evaporate or diminish? Yes, it could. So that's a risk. Don't just do this trade by itself. Don't just only do this trade. I like you to have some foundation. I like you to have some dividends. I like you to have some cover calls, some real stocks, Pepsi, Starbucks, Altria, Netflix. Netflix is shooting up. I like NVDA. I like Apple, right? So this is more like a risk capital only trade. But if you are in a margin account, for example, and you're getting half your money back for this cover call, this trade's basically paying for itself. Because the buy the 100 shares are only going to hold about 50% maintenance, and you're getting 50% back for doing the cover call, so it's basically a free trade. You can come in, if you had $3,000 in your account, you buy 100 shares of IONQ with a cover call for 790 days out, January, got 14 points. Your buying power will still be the same, basically. So you get a free trade because they're giving you half the cash up front, and margin's about 50% or less. How's that sound? But you can only do it once or twice, because if you do it more than once or twice, then your cash will go lower, and you'll end up putting yourself in a margin call. But you could definitely do probably one or two. Tricks of the trade. I got you guys back. All right. Appreciate you guys. Thanks for the likes. Get these likes up to 1,000, guys. Appreciate you. Subs, you want to come up, request, come up, ask questions. I'm going to start taking questions. Hope that wasn't too much. Speaking of which, I've been playing with my ChatGPT, OpenAI. I paid the $20 to get the extra bells and whistles, but I don't know what it does for me. But let me tell you what it says about quantum computers. Let's see. What are quantum computers? What is the theory? How do they work? Let's see what it says.
What are quantum computers? Quantum computers are advanced computational devices that use quantum mechanics, the fundamental principles governing subatomic particles, to process and store information. Unlike classical computers, which use binary digits, bits, to represent data as zeros and ones, quantum computers use quantum bits, or qubits, which can exist as 0, 1, or any quantum superposition of these states. This unique property enables quantum computers to perform certain calculations much faster than classical computers, especially for complex problems like factorizing large numbers, simulating molecular structures, or optimizing logistical networks. The theory behind quantum computing. Quantum computing is based on several core principles of quantum mechanics. 1. Superposition. A qubit can be in a combination of 0 and 1 states simultaneously, unlike a classical bit, which is either 0 or 1. This allows quantum computers to process a vast number of possibilities at once. 2. Entanglement. Qubits can become entangled, meaning the state of one qubit is directly related to the state of another, no matter how far apart they are. This creates correlations that classical systems cannot replicate. 3. Interference. Quantum algorithms manipulate the probabilities of different outcomes by amplifying correct solutions and canceling out incorrect ones. 4. Measurement. When a qubit is measured, its quantum state collapses into one of the classical states, 0 or 1. The probabilistic nature of quantum mechanics governs which state will be observed. 1. Qubits. Qubits are the building blocks of quantum computers. They can be implemented using various technologies, such as superconducting circuits, trapped ions, photons, or spin states in quantum dots. 2. Quantum gates. Quantum computers use quantum gates, similar to classical logic gates, to manipulate qubits. These gates change the states of qubits in ways governed by quantum mechanics. 3. Quantum circuit. A quantum computation is represented as a series of quantum gates applied to qubits. The sequence of these gates forms a quantum circuit. 4. Quantum algorithms. Algorithms like Shor's algorithm for factoring large numbers and Grover's algorithm for searching unsorted databases leverage quantum principles to solve specific problems exponentially faster than classical methods. 5. Error correction. Quantum states are fragile and prone to errors from environmental noise, decoherence. Quantum computers use quantum error correction techniques to ensure accuracy. 6. Output. After running the computation, the qubits are measured. The quantum state collapses, and the result of the computation, classical bits, is obtained. Applications of quantum computing. Cryptography. Breaking current encryption methods or developing quantum-resistant cryptography. Drug discovery. Simulating molecules and chemical reactions. Optimization problems. Enhancing logistics, supply chains, and financial modeling. Artificial intelligence. Accelerating machine learning tasks. Material science. Designing new materials with specific properties. While quantum computers are still in their infancy, they hold the promise of revolutionizing fields that rely on computation-heavy tasks. However, challenges like scalability, stability, and error correction remain significant hurdles to overcome.
You guys hear that? I saw a couple of your questions. Put some questions in. I'm going to go over questions now. Did you guys hear that? Appreciate you. Thanks for joining the live. We're doing stock markets tonight. Got the Care Stock Market Mentor. I got a couple questions. You guys just put in more questions when you have them. If I miss your question, just put it down again. I can only wrap back so far. Jim said, Dr. Jim asked, what about NVDA? NVDA, I think, is still golden. It was sold off today. And I was telling you guys, it sold off because it had like a 3-point gain. It was up like 3 points. And then because of all the trader bots and all the mutual fund managers trading, it went down. It sold down. They took that profit. And then it was down 4.78 today to 141.98. NVIDIA has an AI department, and also they have their own quantum computers. But I think it's gonna, be fine. You can buy it when it dips. You can sell it when it peaks if you want to trade it. I've been doing a cover call on NVIDIA every month, and that one's paying pretty well. I can pull it up for you if you like. Dr. Jim, thanks for the question. Let me look at the high. It looks like the high for NVIDIA was around 146-ish, 149 actually. And it sold off a little bit. So as it starts creeping up, just know that all this volume, all these traders, the real ones that are professionals that need to make that money are going to sell. It's going to come back down. It's going to do a roller coaster. So you got to be able to tolerate that as a trader, as an investor. If your goal is to make, 3 points, let's say 3 points from the stock, maybe lower that goal to 2 points or even 1.5 points, because when the big money gets there, they're going to sell, it's going to come back down. So I don't want you to get left out and miss your trade. If you get greedy, like I say, bulls make money, bears make money, pigs don't. Don't be a pig, don't get greedy. Take a small gain and walk away. Let me show you the cover call for NVIDIA. It was pretty good when I checked it. I'll just do December because we're close enough to December, 34 days. So buy NVIDIA here at 140, 142, okay? It's already creeping up in after hours. NVIDIA, NVDA, 142 a share. So you got 14K, 14.2K for 100 shares. Buy 100 shares. You don't have 14K? Sell all the shit in your garage. All right, December, 34 days out. And we're going to write, let's say probably the 146. Let's see. You want to allow for some share growth. So you can get share growth as the stock goes up a little bit, and then you can sell at the higher price. So 146 gives you 5 points of share growth. And you're getting 845. That's a lot. 147. I would buy it here at 142 and sell the 147 for $8. NVIDIA, 147 strike. For it's paying 8 by 815, which is a nice tight bid ask. That's what you want. All that volume. So buy the shares here for 14.2K. 142. So the 147, which is 5 points higher, and you'll get for December, third week in December, 34 days, you're going to get $8 or $800 per contract, per 100 shares. So the 14.2K investment gives you $800 a month, which is great. And if the stock goes up and passes that strike price, 147, you'll get 5 more points on premium, so you on share growth. So you're going to be getting $1,300. Okay. But we never count that because we don't know if it's going to go up. We just count the premium. So let's do the math. 8.0 premium divided by 142 share price. 5.6% return. So what about NVIDIA? NVIDIA is going to be fine, Dr. Jim. He's giving you 5.63% return for the month, which is, I count to 56% return for the year. So do that. Do the long play. Every month, hit the cover call on that. And you know when it's going to go back to 147, 148, it's going to sell down again, right back down, because all those traders are making money. So get ready for that roller coaster. But the cover call will remain. It's going to pay you monthly. That's my advice on that. So stay with NVIDIA. Another question, what do I recommend? Mr. Dead said, what do I recommend for this week? Okay. I have 4 stocks for you this week. I'm going to write them down. First one is IONQ. So this one's been leaping, bound by leaps and bounds. The IONQ, Quantum Computer stock. You can buy here at 29. You can write the cover call or not. You know, if it does end up doubling or tripling, you know, the cover call is going to limit your upside, right? But I always say, better to have, a bird in the hand. A bird in the hand is worth 2 in the bush, right? But IONQ, I think, will continue to go up, 29. It's probably get to about 40 to 45. And I expect a big sell-off. And then what? Right back up, right? And this is one of the stocks that probably will be a buyout. I mean, if they can do what they say they can do, and that it's the future will tell, because it's a new idea. I mean, the quantum computers are not in effect 100%. They're just learning how to do them now, right? If it's a real science, we'll find out. We have to wait, okay? But I think that this stock will probably, in the next 12 months, will probably double or triple, okay? IONQ, you heard it here first. The next thing this week is NVIDIA. I think NVIDIA will come back up, so you can hold on to NVIDIA or buy NVIDIA, okay? Number 2. Next thing is Tesla. Tesla will come back up. It'll creep back up. I think Tesla will break the 414 old high, 414. Mark my words, you heard it here first. Let's say within 6 months. So I think Tesla will be fine. And then SMCI, super microcomputer, SMCI has been having some problems. they might be delisted from the NASDAQ. If you can take the risk and you like the company, I would think that they'll probably end up being okay. They have a functional staff. Maybe they don't have good management, but if they can get their accountant back and stay on the NASDAQ or go to the New York or other, if they can get it together, which they probably will eventually, then there's value there and the shares will probably go up. And it's already been beaten to hell. That's why. Pull up SMCI for you. SMCI. It's already been beaten to hell from 120, now down to 1858, and then up $3 in after hours to 21. Let me read it for you. Supermicro Computer, SMCI, together with subsidiaries, develops and manufactures high-performance server and storage solutions based on modular and open architecture in the United States, Europe, Asia, and internationally. Its solutions range from complete server storage systems, modular blade servers, blade workstations, full racks, networking devices, server subsystems, server management software, and security software. The company provides application optimized server solutions, rack mount, and blade server storage. Okay, so they're specialized. That's why they're good. And there's a lot of volume. Like I have 74 million today, and that's below average. So the volume's good. So SMCI, I think that one's worth looking at. So IONQ, NVDA, Tesla, and SMCI. I think those are going to be okay going up. Okay, and NVIDIA, what's happening this week? Oh, someone asked me about XRP. I don't do crypto as my specialty, so I can't tell you about XRP. But I think Bitcoin will be pretty prominent this year. And let's say it breaks 100K. I can only say that, So I predicted that before Trump, So Bitcoin 100K, and because the Bitcoin is going to be going up, I think it's going to kind of carry the other crypto. Some of the other crypto are actually more efficient than Bitcoin, so that we might see Bitcoin change over for another crypto that's better, more efficient. We'll see if that happens, but. In general, I think the other crypto are also hot, like this Burning Match I've been telling you about. It's a Burning Match, it's hot. People are throwing money at it, so let's just be careful. Don't put your rent money, for example. They say risk capital only. Okay. And this one here, 525. This is January cover call for IONQ. So you want to go out 2 months, you'll get $500 on your cover call for the 30. $500 return on a $2,900 investment. That's the cover call I'm looking at for IONQ. That's just as good. Thank you guys for the likes. I appreciate you. If you guys can give me 2 shares each, 2 shares, bottom right corner, send it to your friends. Help me get some more people in here. Okay, let's do some more questions. I'm going to roll back. I can only go back so far, so make your question, just put it in again, please. A good solution would be if they would be acquired by private and go private. User, acquired by private and go private. Yes, that's fine. That's what happened to Twitter, or now X. Elon bought them, they went private, but he still paid $53 a share for the company. If that's the right amount. So regardless if they go private or stay public, when they're bought out, they do a tender offer. So they always pay more than the share price. So you guys know what I'm talking about. It's nice to be in a company that's bought out. It's just nice to get that extra, premium. It's a 1 billion user. It's a 1 billion aspect for them. I think they will figure out a way to solve it. I'm reading questions right now, guys. Throw some questions in for me. I gave you 4 stocks that should be good this week that are hot. They're probably good this whole year. These call options on March 25, I have about 120 something days for that call. Jiggly Huff call options is on March 25. Yeah, so you have 120 days. You have 6 months for those call options. You guys, the difference between having shares and having options is the shares are going to probably be there. The options expire at some point. If you bought the call, if you're buying calls or puts, right, those expire at some point. Most of you guys are buying 1 month, 2 month, 3 months out options. I always try to go farther than that if you're buying the option, a year, 9 months, to give it time to mature. A lot of you guys doing these risky trades, you're buying the option after the earnings just to play the earnings, but not knowing if the earnings are going to be good or bad, basically gambling. I'm trying to take the risk out of it, guys. I'm trying to help you have an investment that's going to maintain, Don't do these gambling strategies where you need your option to go up so much in a few days or even in a month, because that's risky, It's better to sell the option, right? Bring the money in, get a smaller amount, but more consistently every month, for example. Have the shares instead of having the call option, because if you just have the call option, it can expire worthless. If we get to your expiration date and it's out of the money, that option is 100% loss. Like example, if you have IONQ, and if you buy that 30 call, right, and we come to 34 days out to December, 3rd week, and IONQ is still the same price, $29, that 30 call expires worthless, 100% loss on your investment. If the stock is 31, then your 30 call will be $100. It'll be 1 point in the money. If it's 32, your 30 call will be worth $200. Okay, but if it's not in the money, it's going to expire worthless. You're going to have 100% loss. So in that way, it's better to have the shares, because the shares, let's say, the shares might be down 2, 3, 4, 5 points, but they're still there. You'll still have a $25 stock value or $24 stock value if it's down 25 points. That's the difference. So options, risky, shares, less risky. Percentage-wise, you can have 100% loss on your options if you're buying them, not if you're selling them. Your stock can have maybe 10, 20, 30% loss generally. Maybe 50% on a major crash, okay? But they'll still be there. So when I hear people talk about options are less risky, it's not, because the option could be 100% loss, okay? Now, on the cover call, that's not the same thing, because you're selling the option. You have the shares, you're creating the option from the shares, so you're bringing money in. So in that way, there's really no risk in that. The only risk is you're giving away the upside. So it's like, in a way, it's like you're short. Appreciate you guys. Should I get a put contract on further push down and mitigate risk? Jiggy Huff, should I get a put contract for the further push down to mitigate risk? Okay, so if you have a position, you can always buy a put, right? But in general, if I buy a put, I want to trade that put. I don't generally just use it for like a hedge, right? So let's say I have Quantum Computer 100 shares, or IONQ 100 shares, Tesla, NVDA. I generally won't buy a put in those stocks because it's probably going to be very expensive, for one. And two, if I thought this stock was going to go down, I would probably have a short position, It's better what I do. I do a hedge trade. I would buy a put on the SPY, on the SPY. One, because it's cheaper, right, than buying a put on NVIDIA or these other stocks. But two, because it's easily predictable, it's tradable. So, for example, you have a bunch of shares, long, you own 100 shares of IONQ, 100 shares of NVDA, 100 shares Tesla, 100 shares SMCI, right? And you want to protect yourself somewhat. You go out 9 months and you buy a SPY put. Let me pull it up for you, SPY. And this way, if the market's down, you're gonna get some money back on your put. Let's go to let's do all. All right, if you're gonna go out 9 months, it's gonna go down to, let's say, August, 272 days, August 2025. So look at the SPY put. I generally factor in a 30% correction. So if the SPY is what? What's the SPY? SPY 600. Let's say it's 586. All right, it's 586. Close to 600. Let's do the math. 586 times 0.3. 175 lower. 586 minus 175. So you're buying a put out of the money. 411. So 411 put. Okay. You're buying a 411 put 9 months out. 272 days. And it's going to be cheaper. And you're going to have a lot of leverage. So if the market comes down, you'll get a nice return on that put. And that would be August 2025. And the 410 put. Let's see. Are they giving me? My Schwab is loading. Okay. The 410 put is 301. So for $300, you can buy a put for the 410 for August 2025. $300. And that'll give you a nice leverage to protect your long account if the market comes down. And what I would do, I would buy about 5% hedge. So you spend your $300, right? 5% hedge, you multiply that times 20, 300 times 20. That'll protect a $6,000 account. So every $6,000 you have, you can spend $300 on a hedge. And the value of that is that paying only 5%, you could easily get that money paid for, you can easily get that premium paid for with what? A monthly cover call on NVIDIA. On IONQ, you get 14%, 11%, right? So the value is that you're going to have those puts paid for by a cover call. So basically it pays for itself. You have the position, you have the shares, you have the cover call, and then you have a put. And they all work together. That's how I do it. Appreciate you guys. Throw some questions down for me. I'll try to get to all your questions. I'm going to go for another 20 minutes or so. Appreciate you. We talked about IONQ Quantum Computers and why it's hot. We mentioned NVIDIA, Tesla, SMCI. We mentioned Bitcoin. Bitcoin will stay prominent, I think, this year. Not an expert on crypto, but put or should I buy another call to average down? Yeah, very expensive. Well, I thought I was gonna go up, down $3,000. I'm trying to get a question, guys. You guys are chatting down here. Send out your questions. Yeah, any genuine questions for Godric? Thank you guys for the live. I appreciate you for the likes. More likes. More likes. Pat, 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 like a video game. You saw SMCI after market close today. Trump. You saw SMCI after market close. Yeah, it's up $3, right? Let me see. SMCI. It was up $3 to 21.68. Did it have news? Gonna make me read the news. S&P 500 posts weekly loss as hopes for December rate cut. I'm not gonna get a chance to read all these news, but if you know why it went up, you can tell us. Trump man, you tell us if you know why it went up. Appreciate you. Thanks for the likes, guys. Have a good night, brother. Good knowledge given, much love. Jay, thank you, Jay, for the gifts. Appreciate you guys. If you guys want to throw me some stars or some, maybe a couple cranes, I won't say no. Some flowers, roses, won't say no. Appreciate you. Want to do a sub? It's only $5 a month. I take care of my subs first. Teach you guys these trades. Good night, Dr. J. Appreciate you. I'll be back on Monday night. Check me out Monday night. Questions. Thank you for the gifts, guys. Appreciate you. So, quantum computers, hot, the burning match, even probably hotter than artificial intelligence, because artificial intelligence is already here. Oh, by the way, my ChatGPT. Let me see what they say. What stocks are involved in quantum computers publicly? Let's see.
Investing in quantum computing involves considering both specialized companies focused exclusively on quantum technologies and larger corporations integrating quantum research into their broader operations. Here's an overview of publicly traded companies engaged in quantum computing. 1. Pure-play quantum computing companies. These firms concentrate primarily on developing quantum computing hardware and software. IONQ, NYSE, IONQ Special
involves considering
IONQ
specialized companies focused exclusively on quantum technologies and larger corporations integrating quantum research into their broader operations. Here's an overview of publicly traded companies engaged in quantum computing. 1. Pure play quantum computing companies. These firms concentrate primarily on developing quantum computing hardware and software. IONQ specializes in trapped ion quantum computing technology. IONQ became publicly listed on the New York Stock Exchange via a special purpose acquisition company in October 2021. Zert 22, Rigetti Computing, NASDAQ RGTI, focuses on superconducting quantum processors and offers cloud-based quantum computing services. Rigetti went public through a SPAC merger in March 2022. Patty Turner Search, D-Wave Quantum Inc., NYS. Known for its quantum annealing systems, D-Wave provides quantum solutions for optimization problems. The company became publicly traded in August 2022. Quantum Computing Inc., NASDAQ QUBD, develops quantum-ready software applications and tools to bridge the gap between classical and quantum computing. Recently, the company announced a $40 million direct offering. Site, Turner Search 2. Major technology corporations with quantum initiatives. Several large tech companies are investing in quantum computing research and development. IBM, NYS, IBM. A pioneer in quantum computing, IBM offers cloud-based quantum computing services through its IBM Quantum platform. The company has been building experimental quantum systems for years and laid out a roadmap for a fully functional, practical system by 2029. Site Certain News 18, Microsoft, NASDAQ, MSFT. Through its Azure Quantum platform, Microsoft provides access to quantum computing resources and is actively researching quantum hardware and software solutions. In September 2024, Microsoft announced a collaboration with Quantinuum, achieving the best performing...
Okay, so I wrote down the companies, the quantum computer companies, IONQ for you, RGTI, I'll write this down, GBTS, I'm sorry, I messed up, QBTS, as in Hubert, and then QBT, and then, so those are new, and then IBM, Microsoft, Intel, and NVDA. We know about those ones. So it may be that IONQ is the main game as far as being one of the top ones, but there's, of course, more companies want to look those up. RGTI, QBTS, QUBT, IBM, Microsoft, Intel, NVIDIA. Kind of like the companies that are dealing AI, it's not that much different. But keep an eye on those, see what you want to do your own research. Always do your own research. Don't just follow some dude on TikTok. But I'm here to answer your questions. All right. IONQ, I traded $28 call December 6th today and made $300. Dr. Paul Goodfellow, IONQ, traded $28 call December 6th, made $300. Congratulations, Dr. Paul. It sounds like you made $300 on the call. Congratulations. I think IONQ is going to go a little higher. It's pretty hot right now. What do you think about Nike stock? Awful Maiden. What do you think about Nike stock? Let's look up Nike. Nike was good back in the day, like in the 90s, when it was doing all the stock splits. It kind of cooled off now, but I think it's probably okay long term. I don't think it's going to be hot like quantum computing or AI intelligence, but let me see. I look at the 5-year chart on Nike, and I have it was $94 5 years ago, so it's definitely in a slow point. It went all the way up to 169. Now it's down to 76. So in 5 years, it lost some money, so that's bad. I'm not sure all the reasons for that. You can look it up, but 76.90 on the stock price. You can probably say it's undervalued if you want to look at it that way. I see the volume, which is, so it doesn't have a 5-year chart, so X, okay? Nike, NKE. It doesn't really have a robust share price. $76 isn't really great. It's another X. I like to have at least 100 or close to 100. Volume. It has the volume. 13 million. So volume, check. It has a PE. The PE, which means it makes profit, of 21 PE. 21 PE, so it's pretty good on the PE. It has a market cap, 114 billion. Market cap 114. I'd like to have at least 50 billion market cap. And then can we do a dividend? Let's have a dividend. Yeah, dividend 1.96%. So it's a dividend stock. It wasn't initially. And it doesn't have a cover call. So CC. So 1, 2, 3, 4, 5, 6. Out of 7 criteria, 2, 3, 4, 5, 6, 7. It has 1, 2, 3. It has 4 check marks. Not great. Kind of slow right now. But for Nike, it's not going to double or triple, but it probably will maintain price and probably go back up if it knows how to get that market share. I wouldn't hold my breath. It might take some more time. It could go a little lower. It's in a downtrend right now. The 6-month chart's looking kind of maybe hit a bottom. I'll read it for you. Nike, together with its subsidiaries, engages in design, development, and marketing and sale of athletic footwear, apparel, equipment, accessories, and services worldwide. The company provides athletic and casual footwear, apparel, and accessories under Nike, Jumpman, Converse, owns Converse, Chuck Taylor, All-Star One, Star Chevron, Jack Purcell trademarks. It also sells a line of performance equipment and accessories comprising bags, sport balls, socks, eyewear, timepieces, digital devices, bats, gloves, etc. And the company was founded in 1964 and headquartered in Beaverton, Oregon. Yeah, so if you're long-term, love Nike, you can stay with it. I don't expect it to jump anytime soon. You got to have some patience with this one. It gives you 2% dividends, so that's something. Schwab Equity Research gives it a B. Of A to F gives it a B. Morningstar gives it 5 stars, so maybe that's coming back. That's something. Market Edge says avoid it. That's a bad one. Ref Infinitive says it's a buy. They look at all kinds of other criteria, but, you know. Anyways. Questions. We're about to wrap up, guys. Give me your final questions. We talked about a few things tonight. We talked about a few stocks that I think are good. Talked about some covered calls. And we talked about taking the risk out of trading so you guys can have some conservative, consistent money every month. Look at these covered calls or naked puts. Look at these stocks that are obviously doing great over time. I think Tesla is good. NVDA, I think it's good this year. Do you trade based on premiums? Colt, do you trade based on premiums? Colt, follow my lives every Monday night. My specialty is to teach how to retire into the stock market. We talk about stock selection. I have 12 criteria of stock selection. I added a 12th one. And 12th one was like how relevant the product or service is, right? We're going to go with the initial 11, which you guys can look at my YouTube videos. YouTube's my profile. Look at my old TikTok videos. I record these lives and replay them back for you guys. And then we look at getting these excellent stocks and then looking at different things. Dividends, for example, dividend plays, and cover call plays especially. And the cover calls, for the most part, are going to give you a monthly return, pay all your bills, retire in the stock market, and we want to get to the point where it's called a cash cow position. I'll show you how to do it. Whereas you're getting so many premiums, let's say 5% a month. After 20 months or 20 premiums, you have paid for your whole investment. Your whole investment is paid for. You're getting monthly income continually, and even if the stock goes down to zero, you still made money because of all your premiums. That's called a cash cow. Basically, on paper, you can't lose. Teach you how to do that. Final questions, guys. We're about to wrap up. Best way to handle account value is small account is certain option trades. Robel's teaching. Robel, you're teaching, dude. You're going live, man. But I appreciate you coming. I day trade with Mr. Fit options. I trade based on premiums. Do you trade based on premiums? So, if I can get between 3 and 5% return a month on the cover calls or naked puts, that's a candidate, okay? But it also has to have all the other criteria. I want volume. I want PE. I want a 5-year chart that at least going up, not going down. I want a market cap of over 50 billion. I want different things. Ideally, a dividend. And if the cover call pays 3 to 6%, 3 to 5% a month, then I would probably do the cover call on it to bring in monthly income. So different things I need, different things I'm looking for. Final questions, guys. Appreciate you. Be back Monday. If you guys want to send me a DM, I'll answer your questions. Just one question at a time, please. If you want to sub, I'll answer your questions first. You guys who sub know I take care of my subs. Do you do private teaching? Robel, yes, I do private mentoring. If you go to my YouTube or my TikTok, you'll see these hour videos. I do one-on-one teaching my system and teaching how to pay your bills, how to get monthly income, retire in the stock market. Yes, I do that. I do a 12-session course. When you send me a message, I'll tell you about it. Guys, thank you so much. Appreciate you. I'll be back Monday night. Monday, next week might be kind of shaky. Okay, we might sell off. Don't worry. I always teach you guys to have a put for the future as a hedge. So, and that's going to protect your long positions. Let's say 9 months out, 1 year out. When the market corrects, right, that put will go up. You have two choices. You can sell the put to get a profit, close it out, or just keep on going with it. See how far it goes down. Either way, it's like protection. So you do want to have some protection. Think about that. We're getting into some shaky ground. I think we're getting higher highs, and people are selling. So be prepared for it. Don't get chased out of the market. You know, think about if it dips. Think about buying a little bit more. If you love that, if you love your stock, you can get behind your stock. I talk about how to build a core 10 stocks you can get behind, that you're going to keep going with. You're going to get the dividends, cover calls, buy on the dip, sell on the peak. Buy on the dip, sell on the peak. Got your back, guys. What's up? Finally caught up with you. You're live. It's usually 2 a.m. where you live. What's up, player? What's up, Raph? Thanks for coming, Raph. I'm gonna put this live. I'm gonna record it and put it on my TikTok if it can fit. I might have to cut it. Check out my YouTube. It's on my profile. I have all my videos on my YouTube. Teach you guys what I know. All right, guys. Thank you, guys. I'll see you next time. Godric out. You guys who sub, appreciate you. I will DM you. Thank you.